Hi, I'm Steve Spencer, a partner at SMB Capital, a proprietary trading firm in New York City, where we trade stocks, options, and futures. In today's video, you will get a look at a short discussion of 4 in-play names covered in our pre-market meeting. The goal of the AM meeting is to make sure our traders are prepared to trade the open. I usually offer several possible trading patterns for each stock and discuss the best risk-to-reward entries based on information we have at the time. Take a look at our discussion from today, and afterwards, I'll walk you through 2 trades that I made based on our morning game plan. So Cole's is on the conference call. Let's just look at the daily first. So just this massive, constant up and down 40 to 80. We've probably talked about this a bunch of times in the last few years. Just has these, let's see when it went up there. So this was 2015, this was summer of 2018. It has these explosive moves back up to where it topped out back in 2002 when the market was getting crushed. And then goes back down. This time it didn't go all the way down to 40. Maybe now with the margins contracting and the lowering of guidance going forward, maybe this is the beginning of it doing a retest in a few months down there. But in the meantime, we have 45. I think we have as S3. And it's just, this is 2 quarters ago. It was up here in the 70s. So this was the May quarter that gapped it down to below 60. You can see here's the 45 support that I have as S3 on the sheet. And above that, what do I have? 49. I think that was when I zoomed in. So you can kind of see when it failed here at 54, they sold it at $50 for like a week, and it broke to the downside. Went to 45 quick over a couple of days. And since it basically got back above, you see it failed here for a couple of days at 49. I guess that's how I got 49. It was consolidating between 49 and 50 for a week. Once it closed back above it, and look, you had another consolidation and just continued the uptrend. So first thing you notice here is a lot of people bought it coming into this. And the thing that really caught my attention was the last part, which I put on in the notes, was the margin contraction. The revenue number was good. So the fact that they missed by 13%, and they guided down a lot on EPS means that they're still getting traffic and selling a lot of stuff, but to do that, they've had to lower prices. And so that's not good. It already trades at a low multiple, but at the same time, the multiple probably trades at a 20-30% discount to the market multiple. When your margins deteriorating, your multiple contracts. So this would probably get it to like a 10 times multiple 45. So we'll see over the next couple of days. Let's zoom in, take a look at the micro view. So initial reaction took it to the 52, or a little below 52, 51.75. Nice pop to 53. People shorting into this and started to form a trend, and now consolidating again, and it's breaking to the downside. It's done 1.5 million shares. It's going to be really liquid. Now they're selling 51.50. And then next is, do they step down to 51? Here's technically our first is R1 here, just to give it a little bit of room. In case they buy it, first move is up, and gets a spike into here. I guess the way I would look at it is S1 is 50. We'll see if there's a lot of bids there. 50 is a place there's usually going to be institutional bids. If a flush right on the open goes to 50 or a little bit below, and it quickly gets bought up, we'll look for a pop at least to 51. But if it just goes to 51 and then within 10 minutes is below $50, they could really hammer it today. So I'm prepared for either direction, understanding that it's down 13% right now. They missed by 13%. So you can kind of see it's a good starting point for it. $1.70 ATR. So 49 to 49 to 52 is a little bit under 2 ATRs. That wouldn't be the worst starting idea for it. Okay. Home Depot. Let's see how much this has bounced. Yeah, it's still bouncing. So I want you to see, this is a different, very different beast than Kohl's. This is extremely strong stock. But we had Walmart the other day, remember? Extremely small stock, although this is showing weakness from the get-go. It's at 230. So definitely everyone's long this. And below 230, you don't really have a lot. Have 230 as inflection. I guess 227 as our first support. But really just looking at this on the daily, kind of see it's the mid 220s where the real support is here. It's like hugging. I think coming into it, it was like hugging. You see this uptrend channel. It's really hugging the top half of the uptrend channel. So people very bullish coming into these numbers this quarter. No, not in the morning meeting I can't, but if you remind me in the chat, maybe at some point we'll do that. So ideally, in a situation like this where they lower growth expectations, and it's bouncing back into an area this makes it. I know I put 230 as inflection because it could come into this 232 here, but what you want is something where everyone's long it from basically above 230, except for these couple of days here. Everyone's long it from above here. You want to be able to short it as close to this as possible, and try for a rollover to to here, and then kind of see. We'll see if it has resiliency. Obviously, a pretty good bounce, very good bounce so far. It was down at 225. What time was this? 6:45 this morning. Then 8 o'clock. They continued to buy it. So it looks like it's starting to roll a little bit now, but it would be great if it opened right here from a risk reward standpoint. Short. Play for move to here and then kind of see what happens. Down 3.5% right now. TJX. So this one's been pretty active. Here's the 30-minute. I think this one did a stock split because I remember trading in the 80s and 90s. It's at the high. Maybe it just got either eSignal doesn't have the stock split correctly, or the earnings were really bad and it got cut in half. I think it was a stock split. Looks like a 2-for-1 based on that chart. So at the high, this one looks like it's set to break to the upside. What do we have for notes on this one? They beat by 3%. They're on the conference call. I'm not sure what they're saying. I'll check that before the market opens. But you can see it's challenging the high. I guess this is 57.65, which I put on the sheet. This is 58.70. Not a lot of volume. But you can kind of see it spiked above the prior high, it pulled into 60, it held, and they're still selling it here in the high 60 area. I can zoom in more for you. Okay, so when it actually spiked almost to 62, then they're selling it here at 61. This is a pretty bad flush. I know Sharp was long some from here. Got flatted. I put this one on here primarily because I think it's going to be a lot less risky than the other two retailers we have there in terms of the liquidity. Although I guess Kohl's, after the initial 10-15 minutes, will be very liquid as well. Home Depot will be more difficult to trade. But it's still also a much different setup than theirs, right? This one has the potential to break to the upside and make new all-time highs. So you got a nice mixed bag between the three of them. And then a totally different setup and catalyst is this MDCO, which apparently had talks with Novartis to be taken over, and maybe there's some other bidders. It already was running up, I think, yesterday on rumors of that. Also, I put in the notes, Amarin is in the same space because the psychology of investors and traders is sometimes when they see someone, the company that has a similar drug might get taken over, then it will make it less likely than the other one will. I'm not sure how much people are really pricing in Amarin potentially getting taken over at this point right now. Plus, it seems like they probably would have gotten taken over by now if they were gonna, at least in the near term. So MDCO is, well, you can see we marked it up. It went from 30 to 50. Recently did a retest to 50 just the other day. So in a huge gap like this, it's tricky obviously to put in support levels. That's why I put a 68 maybe. I was just thinking, it's like kind of the psychology people, they think, okay, it's going to get taken over. Actually, we should go to the daily. So we did this, I forget what stock we did it with a couple of weeks ago. Maybe it was Walgreens. So just to give you a sense of where the stock has been the last few years. So it's obviously on the stronger side, was testing the all-time high, 55. 20% premium to that is 65. It's 40% premium is 77. It's pretty rich up here. Not sure how much upside from these levels. I'll check and see if analysts are giving prices what it could get taken over at, but it almost got to 77 here in the pre-market, which would be 40% premium above 55 where it was. Yeah, I mean, I definitely could see this getting sold up in this area here and flushing in some into the 60s. That's the trickier trade, is shorting it like where it's having a little trouble on the open and trying to capture a quick $3 to $6 down move, and kind of seeing how does it set up after that as more volume comes in. It's already done 1.5 million. So you can see one flush here didn't even get to $70. Yeah, 33% short interest helps. So I guess at this point, they sold it at 76. It starts to sell and it's holding below, I'd say 74. You play it for a move down to like closer to $70.
Now that you've got a chance to look at that short clip from our morning meeting where I walk through the in-play names for today, a reminder that the process that I use to select the best risk-reward in-play names is part of our 2-hour free workshop. So if you want to learn how I identified those names and picked them to trade, check out the 2-hour free workshop by clicking on the link above or go to tradingworkshop.com. Now let's get into the two trades that I took today. The primary focus for me today was Home Depot. And you saw from the morning game plan notes that they had guided down on their growth rate. And if we take a look at how people are positioned coming into earnings, there are people buying this stock. It actually ran up ahead of earnings from below 230 all the way up into 240. So the initial reaction to the news, as you can see on this chart right here, the 30-minute, is it was gapping down below 225. And so the thought process was, as I outlined in the morning meeting, if it came back into the 232 area, there would be some people incentivized who are long from that price or higher to get out. And they'd be very thankful to be able to take sales at that price. And when people start to take sales at that price, if the stock starts to tick lower, more people might jump on. And before you know it, it will have moved back down into the support areas from the left side of the chart. So let's zoom in at a more slower time frame chart. Here's the 5-minute chart in Home Depot. And what you can see is in the pre-market, they ran it up from around 7:30 in the morning from the mid 220s to around 230. And when the market opened, what I was looking for was a spike to around 232 to get short. Now, in this situation, what I'll do is to maximize kind of this idea, which is it could fail at 232 and then trade down to the mid 220s, is short stock around 232, look to cover some as it flushes below 230, but at the same time, while it's at 232, buy some puts. Puts are options contracts, which give you the ability to sell the stock at a specified price. And in this case, when it runs up to 232, we buy the 225 puts because they'll be very cheap, or hopefully they'll be cheap. In this case, they actually weren't that cheap because people, I guess, were concerned that the stock could maybe roll over later in the day and trade lower, but still they were cheap enough when the stock was at 232, such that over the next 10 or 15 minutes, when the stock traded down to 226, they doubled in price. We were able to take some profits and then basically hold some of the puts to see if it sells off over the next few days. And so that's how we traded the primary stock. And then the other one that I looked at, which didn't actually set up perfectly for what I wanted to do, was Kohl's, KSS. And then this one you may have noticed in the morning meeting, the news was actually much worse in this one. We kind of went over the fact that the margins are contracting. There's nothing worse in terms of a catalyst for companies when their margins are contracting. Really positive news is margin expansion. Margin contraction is not good, but we also noted it on the higher time frame chart in Kohl's that the stock had already come down quite a bit, but still wasn't at the longer term support. We looked at that multi-year range from the 40s up until 80, and so there was still some more downside here. So I thought perhaps if this stock started to hold below $50 a share, over the coming days, it could move down to 45, which was the support from the most recent pullback in the stock. And so in this case, the first move was actually to the downside. Right on the open, it flushed to 48. So we used that opportunity when it ran back up to around $50 a share to put on a short position. And of course, I drew that downtrend line where it lined up with the pre-market downtrend that had been established from 52. There was selling, then there was some selling at 51. And so we wanted to look to see if sellers would step back down to 50. For those of you who are curious, when you're shorting it into 50, the natural place to have stops is above $50.30 and $50.50. I wanted to show you one more chart in Kohl's to give you an example. I was not on the desk when this happened, but if you wanted to press something that had really bad news like Kohl's, big guide down, margins contracting, what you want to do is once it starts to hold below S2, which it did in the middle of the day, that is a spot when you get this really tight consolidation, and I kind of circled it there for you, right at the morning low. When you get that tight consolidation, this is where people who have a bearish bias intraday and are trying to put on size, they'll use that very tight consolidation to build a big position when it breaks below that blue line, which was the morning low. And in that case, the risk is no more than 20 cents. And if it ends up going all the way down to S3, that's another $2.50 or so of downside. So wanted to give you a quick kind of look at how I traded some of those after the morning meeting and to give you some more insights. But ultimately, the way that we're most prepared to take advantage of the market open right after 9:30 when things are moving up and down and things are moving very quickly is have those detailed plans coming into the trading day. Hope you learned something. See you next time.